And that means we are here live with our halftime report on a Monday, 2/4/2019. We've got Matt, we've got Tim. Cody's doing the producing on the back end. Great to have you guys here. Matt, how you doing this morning?
Tim, I'm doing better than, what should we say? Not every Rams fan, because I'm not sure every Rams fan actually watched the game yesterday. I'm doing better than every NFL fan in the last 50 years, because I'm still not over what we witnessed yesterday. I'm still not over that bad football. It was not a defensive battle. It was bad football. I wish I took a nap.
I think it started at the quarterback position, by the way. Obviously the kid, Goff, he was beyond unprepared for that game.
He did not know what he was walking into.
Oh, it was a stage bigger than where his skill set was. He's a talented kid, top pick, obviously a great team. They got a great offense. He could not, you could see it in the national anthem, Matt. He was nervous. Obviously, you're going to be nervous. That's natural. He couldn't shake it, couldn't get over it.
No, he was ill prepared for that moment. And quite frankly, I not ever being in that moment, it's hard to judge, because that is the biggest moment of a young man's career, and he's still early into his career. And unfortunately, the Rams look like they're going to be pretty good for the next foreseeable future, so we might see them again. But I saw somebody on Twitter, and I wish I could have given credit for this. I don't know who it was, but they said, "Would anybody complain if the Saints and the Saints and the Chiefs came out at halftime? Would anybody complain at that?" But no, it was not a very, very fun football game. But congratulations to the New England Patriots. I'm sure the Devil's celebrating somewhere.
Congratulations, Sess. I know she's a huge Patriot fan.
Yes, I just tease. I'm a Miami fan. I'm a hater.
Yeah.
But I will tell you, Tom Brady's the GOAT. Bill Belichick's the GOAT. And yeah, Julian Edelman, well deserved on the Super Bowl MVP. Just a gamer. That kid is just a gamer. And it's amazing. And think about this. And I know it's been said before, but I'm just amazed at it. Tom Brady selected in the 6th round of the 2001 NFL draft. Julian Edelman selected in the 7th round in, I believe, the 2009 NFL draft. Talk about overcoming obstacles and expectations, and it's just amazing. It just truly is amazing. 6th championship, unheard of. Congratulations. Well done, Patriots.
The only thing worse than the game was the halftime show. I will say that.
Listen, that halftime show is not worse than Maroon 5.
It was bad.
It was bad too.
Yeah.
But it was not worse than Maroon 5.
I think you were being more of a hater, Tim.
All right, yeah. Listen, maybe I didn't appreciate
text messages at halftime.
My wife wasn't paying attention to the game hardly at all until Adam Levine took his shirt off. So maybe there is some.
I wasn't paying attention to the game until Adam Levine took his shirt off.
Amazing. Was anyone? That was probably the most exciting thing. Like people he stood up and cheered it. It's like, what?
Yeah.
Oh goodness.
Well, let's do Janet Jackson, Justin Timberlake back moment there.
Yeah, wardrobe malfunction. Is that what they called them? I believe.
I don't think last night was a wardrobe.
No, he just took his shirt off.
He just took his shirt off.
Sure did. All right, let's break down the markets here, Matt. On a Monday in the halftime report, one thing that we like to do is kind of thoroughly go through everything that's happening in the market, economic calendar, plan for the week, look at the earnings calendar, so on and so forth. Let's start with the S&P. The S&P is up just a hair, 0.3%. We're at 2712, which is a breakout and holding a breakout, low range candlestick. Give me a read on this thing technically.
Well, technically, I think coming out of last week, it was such a, massive week last week. Economic reports, Fed announcements, you name it, earnings announcements. It was hell week, Tim. Coming back to football, last week reminded me of the weeks I had growing up playing football, and hell week where you had practice in the morning, then practice at night, and it just never ended, and you never had a chance to slow down and take a time out, and that's what's happening today. You're coming out of hell week in the market where you had massive earnings, massive economic activity, and you had a central bank, pulling, a flip-flop, to name all flip-flops, coming in on Wednesday, going from hawkish to dovish. So, it's the market is simply taking a breather here. That doesn't mean every stock in the market is taking a breather. There are some stocks that are absolutely running today, and we'll look at them later on in the halftime report. But I think the market is literally just taking a breather here, coming out of what was a massive week in the market last week, and it's ever since really kind of December 26th. A run that has been really unprecedented in our lifetime. This really hasn't have a snapback rally to this extent hasn't happened since '87. And last I checked, I was like 10 years old when, Black Friday happened in 1987. So it's just taking a break right here. I kind of like a couple things, though, even though it is taking the break. On the overnight action, you tested that 2,700 level yet again, as you've tested it multiple times here on Friday as well. Could not break out of that could not break that 2,700 level. And once that overnight tested that level, couldn't break that level. The cash open happened right here, Tim. And ever since the cash open, you're seeing a breakout of that intraday. It's slowing down, and we've seen this so many times in the halftime report, where you have the initial movement, either up or down, right? It doesn't matter, either up or down. You have that initial movement in the market in that first hour, hour and a half, 2 hours. We come on to the halftime show, and a lot of times you see this because you're coming into that midday time frame in New York City, where it's starting to get lunchtime. People, traders and institutional investors, whatnot, they're kind of, hanging out, talking, getting some lunch, going out and getting a hot dog. It's literally just going to hang out here. And what you're going to see, and I've said this like I'm a broken record, you're either going to form a little bit of a high base and then perhaps break out, or you're going to form a nice little retracement back down into 2708. But even though we are taking a little bit of a slow open here to the week, I'm taking it as a positive today. I was going to say I was surprised. I'm not. I was hopeful that 2,700 would hold as the bulls, because now we are slightly bullish, Tim. Okay, I have officially switched to slightly bullish in the S&P. Most of the sectors, and we'll break those down here in a second, are slightly bullish as well. So keep an eye on the intraday level, right about 2715. But 2,700 holds at the first of the market. And I think that's a positive sign coming into the market for the rest of the market week. And realize this, and we'll break this down, but there's not a lot of news, not a lot of economic activity coming for the rest of the week either.
Mm-hmm. I'm looking across a heat map on tackle trading, looking at all the different sectors, and we're going to go through the sectors. But one area of weakness in the S&P 500 is in healthcare. Allergan, Weyerhaeuser, AbbVie, Insight, Celgene lead the top 5 losers on the S&P. AGN, real quick, Matt. Let's take a peek at what's going on in some of the healthcare stocks. Down, weakness. Had earnings last week. Actually, this just carry through from that.
Yeah, earnings miss. You broke 140. It's carry through.
Yeah.
You do have quite a bit of healthcare stocks reporting earnings this week, Tim. It's a biotech week in healthcare. Biogen, Regeneron, Gilead Science, Boston Science. You have a healthcare week.
Mm-hmm. Stocks grabbing my eye real quick here, Matt. Pizza, PZZA, was up pretty big. Starboard Value is making a $200 million investment in the company. That's not a tradable chart at this point. They had all the news last year.
They might need to make a bigger investment.
Order a couple more pizzas. BMY is up 2% on a report.
Bristol Myers?
Yep.
Yeah.
Another private equity firm taking a stake in a company. Celgene.
It's given up all those gains, though. I mean, it tried to break out, but it didn't. Came right back down. And that's the sector. The sector is performing fairly weak, down close to about 1% today.
Mm-hmm. CLX, Clorox. And we do have a heavy earnings week. It's not quite as heavy as last week, but it did gap out on earnings, 5%. Good, strong.
Don't call that a breakout.
Consumer staples could easily recover if some of these core companies start to move higher again. I know that it was bearish there for a while. And GE
isn't going to move the healthcare sector, though.
Probably not. GE is up 0.5%. They got some good news that they are going to build some of the next generation for U.S. Army's helicopters. What is it this company does? They have so many.
They have debt. They have a lot of debt. They got a lot of debt on the books there. I've said this before. I'm not buying GE. I'm not looking to buy GE, and that news isn't going to make me look to buy GE. But I'm also not the hater on GE that you are. You picked a fight with GE, and GE is winning so far.
It is currently winning. It is definitely, I mean, from a pure technical perspective, higher high, higher low, just gapped out a little earnings there last weekend as well. So, hey, you got to give them credit where credit is due. There's no doubt. Goldman Sachs was in a Wall Street Journal report that they are withholding some bonus payments from their CEO.
Oh, I'm sure he's really hurting for that $14 million, Tim.
The market doesn't seem to care.
It's $14 million. Their bonuses are over $1 billion every single year.
Right. Spotify
That's just a headline in the news that makes ignorant people be like, oh yeah, maybe those bankers don't get it all.
I really like this company. I like their service and product. I know they have mixed fundamentals, Matt. There's no question about that. But that is a V-shaped recovery with resistance and earnings coming up in front of us. They had some report that they were talking about acquiring a new media outlet and whatnot. They're targeting other companies. They're still being aggressive with their IPO business model here. What's your read here on Spotify?
Down 50% last year, up 40% on the year to on this snapback rally. And that's why a lot of these, numbers kind of don't make a lot of sense. Look at this movement. That's a 50% movement to the downside. That's a 40% movement to the upside. The reality is you got to do twice as better to recover the loss. If you lose $1, you need to make 2 on the next side to make back that. So, it's certainly testing that bullish behavior again, Tim. Obviously, you're not going to do anything before this earnings report this week. But that 140 is a pretty solid number. It's a pretty important number for Spotify. And if you look back over here after the IPO from last year, Tim, where did it come down, find support? Right there at about 140. Where did it find resistance? Right here at 140. Where is it kind of holding up in front of that resistance, in front of that earnings? 140. So if you do trade Spotify or you look at, or you invest in Spotify, looking at that 140 number really kind of stands out when you're looking at a potential breakout here of 140. But obviously, we need to see a positive response to the earnings first.
Yeah, let's move on to the Dow Jones Industrial. Not a lot going on when it comes to economic data this week. I know Fed Chair Powell has testimony on Wednesday. You've got an ISM manufacturing number tomorrow. Blue chip companies have been trading in line with the S&P in many regards. Matt, is there any relative strength or weakness you're seeing in the Dow over the S&P 500?
Yeah, no, not today. They're both doing about the exact same thing versus the S&P and the Dow. The strength you want to talk about is really coming into the NASDAQ here. All 3 of the major indexes here are hovering right at that intraday resistance level, but the NASDAQ has been playing a little better over the course of the last week with those positive responses coming out of the NASDAQ last week. You obviously have Google coming out of tonight, which is going to impact the NASDAQ as well as the communication sector. But I think the NASDAQ is certainly vying for that top spot in the rankings of the indexes.
Yeah, I would agree with that. I'm looking at and we will break down some of the NASDAQ components here in a minute. The internals on the Dow are about right in line with the S&P. S&P had 280 companies going up, 220 going down, slightly up day. Dow is literally 15 and 15 right now. So you have a mixed internals on the market. Top gainers on the Dow, Microsoft, Apple, Boeing, Coca-Cola, Intel. A lot of good movement out of companies like that, Matt. I do like Boeing's chart, like the potential. They had great earnings. Apple's breaking out. Microsoft is showing a strength. We're getting leadership from some of the biggest names in the market, Matt, and that's now hitting a new high for Boeing today.
It's I about cut this audio and put it on Twitter. We're in the scouting report meeting on Friday, and Boeing was one of our picks that we put on the options report. And after the gap and run, all of us love this company. I don't think anybody at Tackle Trading does not like this company. I think everybody just loves the fundamentals of this company. And so we were talking about where we're going to target. And I can't remember who it was. It might have been Cody said, Matt, where are you going to target on that? Was that you, Cody?
Yeah, I think that was me. It's like, how do you target?
Yeah, because it was breaking out of all-time highs and it was literally running. And I said, well, Cody, once this breaks and confirms, I'm going to target the blankety blank moon is what I'm going to target.
That's exactly what you said.
And a little more colorful language there, I would say. But Mark comes in and says, Cody, Matt's right. We're targeting the moon on Boeing. But I think we came up with a target of 440.
Question is, are you targeting that on a Boeing aircraft? Put on pump.
That's a bad joke after Boeing's had some wrecks last couple of years there, Cody.
It wasn't the worst joke I've ever heard. I was not going to give that a bump, Cody. Love me. Hey, man, I like the attempt. You got to go for humor. It doesn't always land.
It was good. I liked it.
Boeing, literally, when you target the moon, though, one of the things that you could talk about are things like Fibonacci extensions, which I do find to be important and appropriate if you're trying to show somebody what potential is when you have no all-time high, Matt.
Fibonacci. If you have anybody that is trying to get you a Fibonacci target on Boeing right now, they don't know technical analysis.
They don't understand how to use a fib.
No, they don't even understand the first thing about Elliott wave theory if they're trying to use a Fibonacci extension on Boeing.
The other thing is when you target the moon, how do you trail stop that mechanic? The philosophy behind it, would you just kind of keep working it up as it
Oh,
was
you'd work it
developing?
up over time with slowing momentum. Obviously, if you wanted to be conservative, and Justin, this goes to your question, what would you consider confirmation? If you wanted to be conservative here, confirmation would be above 400. If you wanted to be conservative.
You just use the different stratosphere levels as support levels. That's all you do when you're targeting the moon.
That's it. You just start. Yeah, you got to target certain levels, right? Certain levels. No, I'm confirmation above 400 would be a conservative confirmation. It is a significant whole number. It's within the parameters of where you would put Boeing's resistance level. But you got pretty clear. A close above 390 for me would be confirmation. A close above the high of yesterday, Justin, that one would be very good for me as well. But I'm also more of an aggressive entry into swing trades. So an aggressive entry into swing trades would be a close above, I would say 394. And I don't know exactly what we put in the scatter report, but it would have to be above 394 in my opinion. So above 393, 394, you're right now at 392. You could call that confirmation if you close above 390. You could call it confirmation if you wanted to go above 394.
Yeah. Well, and this is an example of where the strength in the market is right now. Boeing hitting an all-time high running. We've got, upside targets here, Matt, even Apple Computer off that earnings. And we had that long discussion about it after earnings last week. It's now showing strength today. I mean, it's up 2.5%, breaking out of some resistance here, breaking above moving averages. There's a lot of clear air here in front of us. We know how stable this company is, Matt. They've got upside.
Well, and there was some digs at Apple last week on its earnings report, right? Mm-hmm. Oh, they didn't destroy earnings per share and they didn't destroy revenue. I just want to remind you, Google, who is a $750 billion company, is reporting earnings tonight, and they're going to report about $32 billion in revenue. Mm-hmm. Apple last week reported $84 billion in revenue, and they're about the exact same market cap as Google. So let's not put the demise of Apple here. We had it on the scatter report, on the options report above 170. It's running. I like it above 170.
Yeah, I like
it.
Now,
mind you, I like it with a close above 170. I want to see that close first, especially on these snapback type rallies and reversal patterns. It's not the test. I got to see Boeing close above that level. I got to see Apple close above 170. Got to see it.
Mm-hmm. Now, I just got a message. My internet's unstable. If I skip, be aware of that. Apologize in advance if that happens. Let's keep moving through. Are we good still? All right, very good. Exxon is leading the market down on the Dow Jones Industrial. Biggest loser today: Pfizer, DuPont, United Health, and Johnson & Johnson. Exxon had good earnings on Friday, Matt. They actually gapped out and showed strength. They're now coming back here a little bit today. Could be that. Yeah.
It's dollar strong. You got gold a little overextended. You got silver a little overextended. You have crude with the breakout. I still think crude's slightly bullish, even though it is coming back down under that 55 handle. And so it's a little bit of profit taking here on Exxon, but I'm not taking that as anything other than profit taking. We also had ExxonMobil on I believe the options report. Mark made a great point that ExxonMobil is not a great directional trading instrument. It's a better cash flow instrument. But if you'll remember on the report, it's always above the previous day's high. So obviously that's not triggering. And I would not, based on today's price movement, Tim, if you were looking to trigger above Friday's close on Exxon, that would take that off the table for me. I would look for a different trigger.
Yeah. And obviously some weakness in the industrials as well. Dow DuPont, DWDP, Matt, is also down just a hair today. You just got sector rotation. Perfect day to do some sector picking. Weakness on earnings, bringing it back down. We're now fading into support on Dow DuPont.
Nobody's touching Dow, and they're not trading Dow in any capacity unless it gets above 60 or under 50.
Yeah, neutral right now. NASDAQ 100, if you would. I do want to look at thoroughly through all the different FANG stocks.
Dow DuPont's not exactly a swing trader's dream.
No, it's not. I mean, it's had times where it was pay ranging there, Matt. Last summer when the market was stable, it would pivot up, pivot down, pivot up, pivot down.
Yeah, that's fantastic. And nobody was trading that because everybody was trading CRM at that time.
Sure.
So they were better. There were better trends, better pivots,
better opportunities. Yeah.
My point is nobody has this on a swing trading watch list.
Okay. NASDAQ 100. I want to look at all the FANG stocks if we can and really kind of break them down. We've gotten through most of the earnings on the major names on the tech side of it. There's still some coming up. Google, most notably here, Matt. We will talk about that earnings. Give me a read on NQ first, if you would.
NASDAQ, like I was talking about just briefly, just a moment ago, showing a little bit of more strength, relative strength against the S&P and specifically against the Dow. You're having the same type of pattern here where you're kind of hanging out at that ultra resistance level. You're trying to break it. I'm putting that right there at 69.50. I know the tick there is 69.40. But if you break 69.50, you're going to run again, most likely, Tim. And as we talked about 15 minutes ago, coming into the halftime report, we see this a lot. Price comes up into the cash open, it fades for the next couple hours, and then it wants to do something coming into that last hour of the trading day. I fully expect that to happen. And Tim, it wouldn't surprise me in any capacity to see the market run at the close.
Mm-hmm. Yeah,
it wouldn't surprise me.
I wouldn't be surprised with it either. I'm currently slightly bullish on the market, like the newsletter on the tackle trading site has said as well. Probably a plus 140, 35 yard line somewhere in there. I actually think we could probably be a little higher than where that newsletter was.
Personally, I'm in that 30.
Yeah, me too. It's bullish. It's a bullish market right now. But that being said, I'm very well aware of the potential for some pivoting and some selling. Mm-hmm. If you look at the long-term weekly charts on these major markets, Matt, they still are not out of the woods completely, but we're seeing strength, and mostly through earnings. These earnings have been slightly positive. Facebook earnings, Apple earnings. Companies are moving higher in general on earnings. Let's go through all those things.
I did not listen to one thing you said in the last 15 seconds. Can I tell you why? I was just absolutely just flabbergasted, just staring at Cody as he was flossing his teeth. It was amazing.
Hold on.
It was amazing. It was just
How are you gonna call me? How are you gonna call me out like that? They don't see my video unless I'm talking. No one knows that I was doing that until you called me out.
I'm just telling you right now that it's good. I was so glad that you were flossing your teeth. I was so happy.
I like it.
I had to get a strawberry seed out.
That's what you get for putting me on the art of the reversal on Twitter the other day.
That was funny. By the way, I think Cody, maybe me or Cody are the only two that could get away with that, by the way. But that was funny. He's your student. You're his mentor. So he went after you a little bit. I liked it. Even what did you say? Trolling my mentor?
I said because sometimes you have to troll your mentor.
Yeah, it was good. No, it was good. You did a great job.
All right, let's do a quick rundown, rapid fire style, Matt. Facebook, Apple, Amazon, Netflix, Google, and Microsoft. I want to look at all those different companies. Facebook earnings came in strong. Cody had a really good point in the pre-production prep. There's this anticipation that because Facebook's models and Google's models are similar from advertising, that means that it will have strength in Google's earnings. I'm not so sure there's a correlation there. Give me a read on
one and two. I mean, they're 1 and 2 when it comes to social media marketing and online marketing. There's not a close third. It goes Facebook, Google, and everybody else, right? We've read stats and studies about how Facebook and Google make up like 80% of the online marketing these days. I'm not sure that's accurate. I'm just saying that's how important it is. And whether or not there's a correlation or not, I think you can read, because obviously Google's a massive, massive company with so many different investment vehicles coming into Google. But Facebook destroyed their earnings, Tim. I mean, absolutely just killed their earnings report. I can't stand this company, but it's not my job to hate companies in the financial world. The only company I won't buy is Goldman Sachs. I'll even buy JP Morgan. I just won't buy Goldman Sachs. So in terms of this, Facebook is a company that was one of those darlings of the market for its entire run from 2013 all the way through 2017. Obviously got hit on its head, in that last 3-4 months of the market, the same way all of the FANG stocks did. You can't deny this. We've talked about it in the newsletters and other scouting reports. As these things are reversing, you got to be ready to pull triggers. And Facebook had not confirmed until its earnings report from last week. And it's holding that 165 level very, very well. If you're a trader in Facebook, a close underneath 165 would be significant for you. So as long as it stays above 165, you got to be bullish on Facebook.
Mm-hmm. Yeah, I would agree with that. It's showing us a lot of strength here. Give me Apple. We already looked at Apple. Actually, move on to Amazon. Now they gapped down on earnings, and I think a lot of people were anticipating some strength here, Matt. But that's where the earnings reports are completely random. You have to understand, you cannot guess which way the market will go on earnings. It is a crapshoot, even if you love the company. Didn't gap down too crazy, down 4.5% into support. Green candle coming back. We would need a breakout up here at resistance, probably 1800 to call this one bullish. It's
Though, in the last 3 weeks, in everything the market has went through, Tim. In everything the market has went through. When do you expect Amazon to be above 1,700?
I would have thought it would. Yeah.
I mean, it just in the last 3 weeks.
Yeah.
I'm not talking about everything else. I'm talking about the euphoria of the last 3 weeks where Amazon has been neutral between 1,600 and 1,700. That might be the most shocking thing in the entire marketplace, that Amazon didn't run in one way or the other. That it's stuck in that 100-point range, the exact same range that it gapped down on last Friday morning. Obviously, earnings were Thursday night, but that is quite surprising to me. I would still consider. I will never short Amazon. That's like literally. I mean, you just can't do that, right? So in terms of Amazon, I'm never looking to short Amazon. I'm looking to perhaps trade Amazon. And above 1,700, you close above 1,700, that could be a trigger there. But then you have this tick up here before the earnings. So you got really kind of up here at about 1,237, maybe in that range at 1,720. But I want to touch anything on Amazon until it breaks it. I will tell you, and I said this on the Friday scatter report when you weren't here, Tim, this to me reads bull put spread coming out of earnings. That's what I felt. 1,600 strong, and you can sell pretty down below when the market has a slightly bullish behavior. Yeah, it feels and it screams to me bull put spread on Amazon.
Well, that's a system that we trade. Post earnings volatility is going to fade a little bit more. And if you're neutral or bullish, then a credit spread like a bull put does make common sense to me. There's no doubt. Yeah, that could make sense for sure. Amazon, I did expect it more. I think you're right, Matt. The fact that Amazon is neutral for the last 3 weeks is of note in this marketplace. When other companies, other areas are showing a strength and breaking out and hitting good, strong earnings, Amazon did not. I think if the market
did not have a bad earnings either, T.
Yeah.
I mean, they didn't have the rock star earnings that say Facebook or Boeing had, but they had an earnings that was in line with Apple's, in my opinion. Apple responded bullish, Amazon responded bearish. Don't ask me why the market responded that way. That's just how they took it. But in reading their earnings report, I wouldn't give one that much better than the other. And Amazon gapped down 80 points, Apple gapped down, started running.
Yeah.
It's the market. Sometimes you got to trust your eyes.
Keep working through the FANGs, Netflix, and then we will get to Google. And Google is the big one here. Earnings. Netflix showing me strength. We knew that pivot was good.
Yeah, that's a trigger for me. Anything above 340 was a trigger for me. That's a trigger. Netflix, what might be my favorite of all the FANG stocks right now, but Apple, if it closes above 170, would catch up to that. But if I had to rank the ones, and obviously we'll look at Google here in a second, we'll break down their earnings, but Facebook and Netflix and Apple all look like runners for me right now. As long as Facebook holds 165 and Apple holds that 170 barrier and Netflix holds 340, those all look like good runners.
Yeah.
Post earnings.
Google is one of the last FANG stocks to report here. In fact, it is the last FANG stock to report. And anticipation for this earnings obviously is going to be very, very high. Most of the companies, we did see Amazon come down, but a lot of them have been showing a strength. Facebook, Apple, like we've just been talking about. Some numbers here, Matt. They're expected to put earnings in of 10.88 and revenue of $39 billion for the quarter. One of the best companies in the market. Everybody knows how good Google is.
What did you get the earnings per share and revenue at?
On investing.com, they have a projection of 10.88 on earnings and 38.9 billion on revenue. That's what the estimate is.
That's not what you got that on investors.com. Earnings Whispers had it at 1108 and 31.28 billion.
Interesting. So Earnings Whisper has a higher EPS number expectation than that would be a beat. And then what was the revenue number they had?
31.28.
That's much lower than that. So those are very, very different numbers.
Earnings Whispers more than investors.com.
Yeah. Yeah. What do we expect here? What are we looking for at all, if anything?
Fireworks.
Fireworks.
Same we're expecting on Amazon. Same thing we're expecting on Facebook and Netflix and Apple. 15 minutes after the market closes, that intraday chart on Google is going to be up, and I'm waiting for the movement.
Mm-hmm.
The question is, do you want to trade it in front of the announcement?
You've got a $45 market maker expectation. Volatility on that is about 3.54%, somewhere in there. Traditionally, I think that's.
I mean, you got low volatility right now.
That's right.
I mean, you've had volatility come out ever since the 24th. The height on this volatility, and this is important, guys, the height on this volatility happened literally on the 24th. Mm-hmm. Ever since then, you've had decreasing volatility. It would be tough to do a type of inverted butterfly iron condor. I don't know if I'd have to price it out, but where volatility is, it would be hard for me to recommend or to trade something on short volatility.
Yeah, I've got IV at 29. Yeah, I'm looking at it. It's definitely at the low as well. It'd be hard to short volatility. Are you
kidding me? Mm-hmm. IV at 29 doesn't mean you can get 2% on a covered call.
Mm-hmm.
I mean, you're getting like 2.5% on a covered call. It's going to be tough to do an earnings strategy on Google.
Probably going to be a pass and wait to see how it gaps out one way or the other. Obviously resistance. What do we got up here? The exact trigger on that, Matt. It's got to clear. And if you do have good earnings, it's going to clear resistance.
Resistance is going to be 11.15. Excuse me, 11.50.
Yeah.
Yeah.
Big announcement tonight. We will obviously be breaking down how it reacted and everything tomorrow. I'll be paying attention to that. That will drive the entire market. I don't expect anything from now till the end of the bell or even in the morning more important than the Google earnings. So going to be key.
There's no economic reports. Okay,
right.
You do have a manufacturing report tomorrow that's important, but that comes out, obviously after Google tonight. So Google's going to be the major announcement tonight. But you also have another major news event happening tonight, Tim, and that really kind of impacts the currency market more than anything else. And I'm sure we'll get into that here in a second. But you do have the Bank of Australia announcing monetary policy, and although nobody really expects them to do anything with the announcement, we expect them to come in at that 1.5% range, the same way they have been. It's going to be interesting to see how their announcement, especially in light of the Fed doing what they did last week, Corrado and Draghi from the 2 weeks before that. So in the last three Fed announcements, Tim, between the Bank of Japan, the FOMC, and the ECB, they've all went dovish, and they've all cited slowing growth. Global growth is concerns, trade war is concerns. And out of all the countries that have been impacted based on the Chinese and American trade war in 2018, Australia and New Zealand are two of those big countries. Both of those countries do a tremendous amount of trade with China. Both of them are commodity-driven economic systems, and so it's going to be interesting to see if they do go dovish, because we've seen price come into the Australian dollar, into the New Zealand dollar. Those are two of the best performing currencies year to date. In fact, it literally goes Canadian dollar, Australian dollar, New Zealand dollar. Those are the three best currencies. What does every one of those currencies have in common? Commodities. Right? Commodities have been the star year to date, in my opinion. So it's going to be interesting to see what Australia does, but we'll keep everybody up to speed tomorrow when we meet with the halftime crew.
Let me take a look at the dollar index, if you would, while we're talking about this. Might as well move right into the dollar. Actually, quick peek at the Russell. There's not much different there from my perspective. RTY. I know we've had strength, Matt. We know small caps can run if the market does bullish. It does have a lot of upside, but pretty similar with the other indexes. Markets are moving slightly bullish.
That intraday is showing a little bit more strength intraday, Tim. Whereas a lot of the other indexes are kind of hovering at that intraday resistance level that we've seen over the course of the last couple of days. This broke out of that intraday. It's running, and obviously it's now fading just like the rest of the market is right now. But it does have a little bit of intraday strength versus the other indexes, with breaking out of the previous day's high. The other indexes have yet to do that today.
Yeah, dollar index, if you would. Let's move into currencies, commodities, and then all the different sectors. Dollar's flat to neutral for me. I don't know exactly where we put it on the Forex report. Negative 35 in that, and that's the fading pivots here, Matt, and also the fundamentals, kind of the expectation. Is that where we are?
Well, if you wipe out today's price action, then it's slightly bearish. I mean, you just broke last week. You had a very, very dovish report coming out of the Fed. You broke the 96 handle, a week and a half ago. You had an extreme bearish movement coming out of the Fed coming in on Wednesday. But here's the problem the Fed has, and this is the frustrating thing for almost every trader out there, and I'm talking currency trader, is the Fed gave us a very clear indication that they were moving dovish, right? And they were slowing growth. But then we get economic reports out of the US that just prove the Fed is just completely full of shit. And that's the truth. Because on Friday, we had a stellar manufacturing report. We had an amazing, Tim, unemployment report. And just congratulations to the US economy for a second. Truly, and I'm dead serious here. 100 straight months of job growth in the US. 100 straight months of job growth in the United States. We have more job openings than we can find people to fill those jobs, Tim. Yeah. And so when we're looking at this and the traders coming in on Friday and the Fed is signaling, let's go bearish on the dollar. Let's go bearish on the dollar. We're dovish. And then the very next economic reports we get are extremely positive for the U.S. economy. It's just like,
I have a question for you. What's more impressive? What's more impressive? 6 Super Bowl rings or 100 months of job growth?
100 months straight job, because nobody cares about the Super Bowl when it comes to
100 months. Seriously, I think people want to be able to pay their bills more than watch
100 straight months of job growth. That is amazing, guys. That is amazing. I want everybody to understand how amazing that is. And like Mark said last Wednesday in the Mind of a Trader series over there at Tackle, everything's awesome.
Yeah,
everything's awesome. But it is 100 straight years. Years that would have been awesome too. 100 straight months of job growth, and so it's just mixed signals. That's what it is. It's mixed signals coming in. And so when I'm ranking the dollar, I got to go on the technicals. I got to go on what the Fed tells us in the technicals. So coming into the week, I felt like a slightly bearish call was absolutely appropriate on the dollar. I wanted to go at the -40, but technically it was slightly bearish. So I went with the technicals, but we've had positive economic reports and the U.S. economy is still doing great. And so, yes, the rest of the world's slowing down, but the central bank, the United States Central Bank, is not the United States Central Bank of the world. They're not the World Bank. They're not the IMF. They're the United States Central Bank. The U.S. economy is doing great. What are we doing? Raise interest rates. Let me do something. Keep it status so I can make some money trading the dollar. That's all I'm complaining about. That's all this was about the last 5 minutes, is just Matt complaining about getting stopped out on a trade. That's all this
Matt,
was.
I will join your rant on that, because Forex trading the U.S. dollar has been irritating.
It's irritating. It's whipsaw every single day. It's made me not want to trade currency lately.
I'm with you on that one.
Yeah. I mean, we will get some clarity.
Don't get me wrong. Okay, there is some really good trades setting up for the dollar this week, but no, it's just me complaining. That's all that was.
No, and I'm looking across all different currency markets, Matt. There will be some of the cross pairs that are setting up. I'd recommend everybody go check out the Forex report and get a full detailed analysis on that. But where a lot of the action for me is, I know the dollar's the most important one. I'm watching this crude oil test 55 and it can't clear and break, Matt. It is going to catch a run at some point. And these energy-based commodities, crude's down 1% today, Brent's down, but they keep testing it,
I called it a break on Friday too. That closed above 55. That's a break for me. Yeah. And it tested down. Dollar strength today tested a little bit down, but I still got to give that a slightly bullish rating. And I don't know exactly where we put it in the report, but it was in the 25 to 30 range.
Well, and if you're looking for a new trigger, obviously break it down to intraday. That's true of any chart at any time, by the way. If you ever need a new trigger to get into a new trade, go down to a shorter time frame. Crude has some potential upside, Matt, if the market wants to catch a run here. We're above moving averages. We've been pushing another close higher. Any dollar weakness should allow that thing to propel itself. Going to be an interesting week for crude.
Well, I mean, it tested down. But a lot of these commodities early on tested down as the dollar was testing up. There wasn't a lot of news pushing the dollar up, Tim. Mm-hmm. It really wasn't a lot of news coming out of the overnight action from the futures and Forex open from yesterday. So I'm focused on the cash open here, T. And ever since you did have that cash open, here it is, snapback V-shaped rally. And you saw it on gold, you saw it on crude, you saw it on silver, and so you had a lot of this negativity coming in the overnight hours, and then ever since the cash open, it's pushing it back up into that 55 handle. But if you do get back up above 55, I would not shy away from trading crude. Mm-hmm. Put it like this: crude is off the ban list for me right now.
Yeah, I think so too. I'm getting there.
We're back trading. We're back trading crude. I like it.
You know, most of the commodities are down here today on that slight dollar strength. Some of them are dojing. Not every commodity is down. Natural gas is down 2%, and I'm very concerned about this pattern. I might even be moving from a neutral to more of a bearish slant on this one here, Matt.
Tim, I know we don't talk a lot about palladium, but palladium was our highest ranked commodity coming into the week. We felt gold, silver were a little bit overextended, and the close on oil, even though it closed above 55, it wasn't exactly strong above 55. It really showed a lot of neutrality after it got up above that 55 handle. So I am slightly bullish on crude, but to me, the trade of the week coming into the market was palladium. I love the fact that it was sitting on the 20-day moving average. It's hugged it over the course of the last little bit. It's got a very, very consistent trend line, as you can see on that moving average. But if you look at this trend line over the course of just a little bit, you have a very consistent trend line coming up here. I like this movement coming in, real big momentum, retraces back down into that moving average. That's a trigger for me, but 1350 would be another trigger. Palladium, I would give, coming into this week, palladium was our highest ranked commodity.
Yeah, and those industrial metals are looking good. And I even, I like what copper's showing me for a potential breakout. That palladium had a much better trend, but you are also seeing some strength in soybeans that I think you've got the chart up here now. Yep. And it wants to break. That ascending triangle, Matt, is a beautiful technical pattern.
So much.
Yeah.
And keep an eye on soybeans, guys. We've talked about this in reports before. We've talked about it in the halftime report. But soybeans has been beat up a lot coming out of that Chinese-U.S. trade deals of 2018. And then you form this very important resistance zone. And if you want to give that resistance zone a number, I'd give that number at about 930, in my opinion. That would be the top end of the resistance zone, would be 930. You got about 925 where you got kind of in the middle of that resistance zone. You break 930, though, that could run to you. And it might need some positive U.S. response to China trade deals. But, I mean, we've had positive responses to these trade deals. I think we're just waiting for some confirmation here. So keep an eye on soybeans. Keep an eye on palladium as well. With gold and silver, I love them. I love gold. You know, it's bullish to me. But a little bit overextended. So if I was looking at maybe getting into something this week and I wasn't already in, say, a gold or a silver trade, I wouldn't look to catch gold at the end of a 5-day rally where it went from 12, what was that, about 1275 to all the way up to 1330. Gold doesn't like to run like that and continue to run. Gold's not Micron, for example. It's not Applied Material. It's not AMD. It's gold. It's very conservative. So I'm not seeing any new trades coming in to go. A little bit of profit taking today. That's all I'm seeing. I expect this to fully do what we did over here, T. Now that gold has kind of ran, let it kind of consolidate and let's run it. Let's run again. So to me, palladium, keep an eye on soybeans this week is the two commodities I would look at, and obviously crude above 55. Natural gas. You were talking about natural gas. It's still untradeable to me.
Yeah, but it's violating support, and we're moving more into a downtrend. I agree. It's untradeable. Yeah. I think that's where my head's at.
We've been keeping natural gas at the 50-yard marker, and when you see something at the 50-yard marker on the scoreboard, guys, that means untradeable. That's what that means. Yeah. When it's untradeable, it's 50-yard mark. And we gave it a slightly bearish call. I think you had to give it a slightly bearish call. It's violated $3. It violated $2.75. 250 is the next step down.
Mm-hmm. And I know traders do sell naked puts against some of the natural gas ETFs like UNG, and I understand that. Be aware that you may have to take delivery on that product. That's the only. You got to boomerang style that trade if you're going to do it.
If you sell a naked put on natural gas, you better be fully aware that you're going to take possession at some point, or you should never, ever, ever sell a naked put on natural gas. And naked puts in the commodity market right now, they're not available to you guys.
Yeah.
Be cautious with it.
Yeah,
especially on natural gas.
Quick peek at SOYB. Had a question from Abel, one of our loyal halftime crew members. How do you trade an ETF on soybeans? SOYB is tradable on the actual equity product, Matt, the ETF. The options, I don't believe, are very good though. So you
but you got a cheap ETF here, Tim. You trade the shares. I mean, I'm sure the options are going to be illiquid. And as you can see, let's look at this from an open interest perspective. I take it back.
They're
You can
not
do it.
too bad.
They're
Not
bad.
terrible. I would look for a break of about 17 on that ETF. It's a little bit higher up.
That's
We're not quite
conservative.
there, but
That's conservative. If you break
maybe 1685.
930, if you break 930, you should break 17.
Mm-hmm.
But the trigger, and again, you guys got to realize this: the trigger isn't on the ETF. You have to understand that. The trigger isn't on SOYB. It's not on GLD. It's not on USO. It's not on UNG. It's on /ZS. It's on /CL. It's on /GC. The trigger's in the futures market. Even if you don't trade the futures market and you trade the ETF, because the ETF's the victim to the futures. You don't trade the victim.
And you could actually set it up that way. You could set it up with the conditional order, not off this one, but when the other stock triggers by this option.
Yeah,
trade this
that's
option.
exactly what you do. That's exactly what you do. But I've never traded SOYB. I've usually just trade futures. But I will tell you, I was a little surprised at how liquid it is. It's fairly liquid. It's not bad. It doesn't have weeklies, but you got 300-400 open interest. You got 50, 60, 70 on the volume. You got an at the money, bid-ask spread of 5 to 10 cents. You can do that.
I like it. Being on a Monday, Matt, we go through all the different commodities and do all the full market prep, but we also go through every sector. And I want to take a quick peek at FREEU, all the Excels, all the different sector spiders that we use on our list and kind of break them down technically. The market has been moving bullish, and I did see that we were ranking things, even more bullish as the market continues to fade higher. Today's confirmation of that. Give us a rundown of the sectors, if you would.
First and foremost, as we discussed last week from a seasonality perspective, two sectors, seasonality that do really good this time of year. Basic materials and energy, utilities, and financial are historically two of the worst performing sectors over the course of in February and March. And we usually look at about 20 years of data when we're looking at seasonality concerns. As you can see, for the first time in a while, guys, that breakout, I told you that breakout was very, very important for us to tackle. And as you can see, most sectors are just subtly, it kind of looks like a war field, not a scoreboard here. They're just subtly inching their way up. The bulls are subtly destroying the bears and progressing. Trench warfare happening here in the tackle trading of, I was going to say Forex report because I did the Forex report this past weekend, but newsletter. Thank you. But as you can see, just some subtle differences in the sectors. But the only sector we really gave it as a slightly a neutral rating, expecting a breakout, was discretionary. Again, when you see us rank something on the 40-yard marker, we're expecting something. We're expecting a breakout of something. We're expecting a retracement to trigger, a breakout to trigger, something along those lines. So it's not really necessary to read that we're neutral, but we're waiting on an important trigger above a certain level. Real estate coming here at the 20-yard mark, that's a little misnomer for me personally, guys. I'm actually neutral on real estate. I was the most bearish of the scattering report, and it's just simply because it's overextended. And I'll look at that here in a second. There's no trade when something's overextended, and everybody, especially a tackle, knows this. I hate breakouts that you've had to run into. And real estate has ran into that 52-week high. So we'll break that down. And then as you can see, the dollar was on the negative 35 with the price movement that happened today, Tim. I think you got to bring that back down into that 40 range. So I just want to quickly look at that. Let's take a look at the sectors from an actual price perspective. Technology here, Tim, is one of the strongest sectors. It's been performing really, really, really well. It broke and ran. It's obviously on the backs of Apple and whatnot, but you got to give this a slightly bullish rating on technology. It's running today. Doesn't really have overhead resistance until you start getting into this level. Right about 69.70. So keep an eye on that, but that looks like a runner. Discretionary here we had ranked at a negative 40. It is one of the, not negative 40, positive 40. It is one of the best performing sectors today, up 1%. We just didn't really trust what happened on Friday last week, when the market kind of held its support levels and stayed above 2,700. We didn't like kind of discretionary coming in. And some of those charts in discretionary are just terrible. I mean, when you break down the individual components of the discretionary sector, those charts are ugly, 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 especially in the retail sector. Those retail stocks like Macy's and whatnot were just so bad. So, it's bullish based on its technical analysis, based on the actual sector here, but we did downgrade it versus the other sectors just solely because we didn't like Friday's movement, and those individual components that make up the discretionary sector were just not good. I mean, you were looking to short. You weren't looking to buy anything. So we do have discretionary as our worst ranked sector coming into the week. Looking here at industrials looking very similar to Apple, to be perfectly blunt with you guys. If you remember that Apple gap up, doji, fade action, break and run. So you're looking very similar here on Apple with the industrial index. Anything above 72 is bullish, in my opinion, on industrial. Consumer staples here, I'm very hesitant about consumer staples for a variety of different reasons, but you got to love the price action today. It's testing the intraday resistance level. If it breaks, it should run to 54, but you got to give it into the slightly bullish capacity. It's above the 9 EMA. It's above the 20 and the 50 SMA. Very bullish action. One of the best performing sectors, and we've seen this rotation once it got above this tremendous trend line and held its trend line. Look that gap. Oh, nope, that wasn't the sector. That's how important Facebook was to this sector. This was Facebook's earnings report. Facebook and the sector all gapped up. I got this as a slightly bullish, but it is one of the better sectors to keep an eye on as those FANG stocks continue to turn over. Financial is in a high base type situation where it would need to break out. Real estate is overextended. And as I was saying, guys, it is the number one sector based on price over the course of the last 3 weeks. But when I'm ranking those sectors, and when the tackle ranks those sectors, what we try to take into account is our expectation coming into the week as well. We don't just look at historicals. We look at patterns. We look at overhead resistance levels. We look at those levels in ranking for the scoreboard. And as you can see, you just ran so much coming into that very important resistance level at 34 and a half. So if it breaks that, yes, that is absolutely tradable. But the most likely scenario, and this is why I'm a little bit more cautious on real estate, is because it's just overextended. The most likely scenario is it either retraces or it fades. So for me, there's no trade here. It's just full of a whole bunch of REITs that are typically very positive for long-term investors. Utilities, you got to like utilities above 54. It's a boring sector. I don't need to look at it that much more. Energy fading a little bit, coming into this very important resistance level. And energy and basic materials, yeah, they're great sectors. They're doing great. We got them ranked into positive, but you also got a lot of earnings coming up on the basic material and the energy sector, just to name a couple. PetroChina is coming out later on this week. British Petroleum coming out later this week as well. You got other energy and base material stocks coming out reporting this week as well. So keep an eye on those sectors. They should be movers this week. A little bit of profit taking to start the week. And then healthcare, anything above 90 is slightly bullish to me on healthcare, but healthcare is the week this week. You got a lot of stocks reporting earnings this week. And overall, you got about 151 companies that are 10 billion or above market cap companies reporting this week. Economically this week, Tim, I want to show you what I'm most excited about this week. Guys, the number one thing I am excited about this week, besides, trading and trading the reports and everything we do at Tackle, the number one thing I am so excited about this week, the number one thing, Tim, is this. I only have to deal with Powell on Wednesday night, who's probably going to say something stupid. And I only have to deal with non-manufacturing. That's all I got to deal with. But I had to deal with all this last week. And that's just a ton.
You know that skit with Will Ferrell and Christopher Walken from Saturday Night Live about I need more cowbell?
I need more cowbell.
I need less.
One of the greatest skips. I need less Powell.
I need less Powell bells.
I need less Powell bell. That's fantastic. I love that.
All right, Tim's dad joke landed.
Dad joke. Nailed the dad joke. I love
as
it.
you were going through the sectors, I was breaking down some of the individual components on the holdings. One note on the XLC, Google earnings tonight, they are 20% weighting in that sector. Obviously, it's going to be a big part of it. The discretionary.
Who's is Facebook bigger?
No, when you add Google A and
Google.
C together, it's bigger. Yeah.
Google's bigger? Okay.
Mm-hmm. When you add both the A and the C shares.
Well, and just to remind, I know we just talked about it. This is what Facebook did. And Google's a bigger component in the sector.
Yeah.
It's very, very important. Google's earnings are extremely important. If this is going to continue, right? If we see that recovery, we need Google. Google's big.
100%. And also in the discretionary sector, Amazon's such a heavy weighting. Is very smart that you guys broke that down and brought back the rating a little bit, because them not gapping out was a major reason why that sector can't run right now.
We only have a 25% Fibonacci retracement.
Don't start. It's too late in the show to start Fibonacci's. I can tell
you. We only have a 25% Fibonacci, Tim.
Some quick rundowns, by the way, stocks that are highlighting and hitting the wire here right now. Cron is trending.
Cron is driving.
Cron is just destroy. Like, I literally, this was a perfect breakout. When it broke 14, I bought. And oh my God, it's making me nervous that it keeps going so fast.
Not just you. That was on the report, brother.
Yeah.
That was on the stock report. Boom. Nailed that breakout at 14. That sucker's running. It's parabolic. It's crazy. That's when you just trail stop losses.
Oh, Noah, would you say Cron is high?
Okay. I was actually going to say if Cron hits 30, we should all pull an Elon Musk and start getting toked up in the halftime report. That's what I was going to say.
Noah needs to be the dad joke on Twitter guy.
He is the dad joke on Twitter guy.
I like
That's who he is.
Aurora Cannabis also up 10%. The marijuana stocks are all running, Matt. MJ, which is the entire ETF, is up 6.5%. We talked about the liquidity, and here's two examples here today with soybeans and MJ, and everybody out there. I mean, pay close attention and make note. If there's something you want to trade, there's probably an ETF that will give you liquidity and something you can trade in it. Just showing a ton of strength here to start the year. This is parabolic.
There's more ETFs than there are mutual funds.
Yeah.
Think about that. And there's what, 12,000 mutual funds?
The market is moving. Oh my, how the mighty will eventually come back into your watch list at some point. Give me one last look. I'm just rapid firing through a few stocks here. BB, Matt, BlackBerry. Do you remember when we started trading and Research in Motion was the hottest stock on the planet?
When did they change to BB?
They've had to change their ticker symbol and their business model a few times.
I had a good joke there that I couldn't use.
Yeah, I'm glad.
I think you know the joke.
I do. You know, RIM is a good example how companies don't always have to go back up. I remember when we started trading, Matt, Research in Motion, which is BlackBerry, they're the ones who make Blackberries. They were as hot as, say, like a Square or a PayPal or any of those high flyers.
They were hotter.
They were a huge company. They made a product that everybody used. They loved. The iPhone came and blew them out of the water.
It was the government. The government federal government had a contract with Research in Motion to provide Blackberries for all government employees. And once Apple came out with the iPhone, they died.
Yeah.
Hey, adapt or die.
That stock has never really recovered. It used to be $150 stock. I know it's on an upswing right now, V-shaped recovery, but from 10 years ago, it's down immensely, obviously.
Yeah.
Say la vie. Cody,
I want to ask you a question.
Uh-huh.
If you had to choose one or the other, and you have to choose one or the other, are you going to buy BlackBerry or General Electric?
Oh, God.
You had to. Come on, if you choose,
it hurts him. I was going to say it hurts him to even have to say.
It hurts him.
He couldn't do it.
I would buy GE. Don't trade emotionally. It is showing me some reversal characteristics. They have some positive news, Matt. It's still an ugly company. They're not buys.
GE's chart is far worse than Research in Motion's. Or BlackBerry.
I don't see a path to where RIM dominates again. I think GE, if they shed their bankrupt assets, they could probably come back and actually be a good company at some point. They got to get back to who they are, though. I mean,
GE's not going away. BlackBerry could.
Yeah.
And if GE does go away, guess what? I promise you one thing. The United States federal government will bail them out.
Oh.
Just write it down. Just write it down right now. GE is such an American company in their eyes that they cannot allow them to go bankrupt. Not going to happen.
Mm-hmm.
So both bad companies, both getting getting slaughtered over the last few years. But if I had to pick one, GE is easy. It would be GE.
James in the chat says GE may buy BlackBerry.
Good. Not going to happen. I don't even know if GE's that dumb.
Oh, I don't know. Don't get me started. I do love a lot of picks on this option report. If there's one that grabbed your eye this morning.
Everybody give me your favorite. I'll give you mine first. My favorite is HLF. I love the break on Herbalife here. 60 was such an important number for it. It broke on Friday. It's on the report. It's running. That's my pick of the day.
Cody, I'll give you Adobe.
Adobe is a good one. That was up there for me as well. That break of 250, that's good. That was on the report. Tim, your favorite?
Yeah, it's a tough one. It is a tough one. I think Workday's momentum play. It's a more complex play because you gapped on earnings and strength, but it's got upside. And here's what I like about it. You have tight risk. You know where to put a stop loss, and you would not give it a lot of room to wiggle. There's only should be. Trade. Yeah, it's not a rookie trade.
It's a momentum play, but it's a good one.
I do like that
one. About 180. I mean, that's a good one. That Herbalife one, I'd love that break of 60. The problem is it's got earnings on like the 15th or 16th, so it's going to be a quicker swing trade. But that's a good one. You got a couple other ones. We talked about Boeing, talked about Exxon, and the last one I want to point out here is Team. And I'm going to point out for a couple of reasons. Tackle trading, hashtag tackle team tackle, right? Mm-hmm. Hashtag team tackle. So Team here, significant break of 100, nothing above it, no earnings coming at us. Keep an eye on this. I love that break of 100 on Team.
Well,
from the options report this week.
Very good. All right, Matt, we're done here today. We've got onboarding tonight for new students at Tackle. We've got our shows tomorrow. We'll be back tomorrow breaking down all of our earnings. Cody, any last thoughts there, young man? I saw you coming in.
Just last thoughts because it was in the chat a couple times today. I believe it was on last week's or the weeks before. Roku also having fantastic move. That's a good example of why to look at previous reports because they can set up and take a little bit longer than a week to set up. And Roku is a good example of that.
If you're a Tackle 25 trader, real quick note, Disney has earnings on the 5th, and that is after the bell, looks like. But double check for Disney earnings and Boston Science. So the two Tackle 25 stocks that have earnings. Activision next week, Applied Materials next week, but those two do have earnings this
week. Let's make sure we break down both Boston and the other Disney. Let's make sure that we talk about whether or not collaring is appropriate or whatnot on those days. So Cody, make sure you jot that down, guys. And if you love that Tackle Trading halftime report, you love coming out here and being with us, hashtag Team Tackle, hashtag Halftime Crew, go ahead and give us a like and a share. You guys are the best. We got a full week at Tackle planned for you. We're here all week in the reports, but we also have the Traders Lounge every day. We also have the Coaches Show on Thursday. We have the Cash Flow Club on Coach Show on Tuesday, Cash Flow Club on Thursday, and then this scanner report's coming out on Saturday. So Tim, Cody, for Tackle Trading, we're out, guys.
Peace.